Stop scrolling for a moment because what I am about to share isn't just news, it is a financial survival guide for the coming year. If you think that as long as you don't actively report it, Centrelink won't know about that extra $50 a week from your investment property or that small dividend from your overseas shares, you are making a dangerous miscalculation. As we move into 2026, Services Australia has fully activated the new ATO real-time data scraping system. We are no longer in the era of self-reporting, we have entered the era of algorithmic auditing. Your bank statements, your rental income, your crypto wallets, and even your overseas remittances are now transparent in the back-end system. If you don't understand these new rules, you aren't just facing a debt notice, you could be facing prosecution. Today, I am going to break down exactly how this invisible eye works, and more importantly, how you can protect your family's financial lifeline. So, does this mean the government is watching every single cup of coffee you buy? The simple answer is no, but the complex reality is that they are watching every income stream that feeds your lifestyle. Here is the binary clarification you need to understand. The system does not care about your spending, it cares about your capacity to spend. Many people ask, if I don't declare it now, can I fix it later? The surface answer is yes, you can always amend a report. However, the hidden condition in 2026 is that the data matching program is now faster than your ability to amend. By the time you realize you forgot to declare that Airbnb income, the system has already flagged a discrepancy. We are moving from a system where you tell the government what you earn to a system where the government tells you what they know you earned and asks you to explain the difference. This shift from trust-based to verification-based is the core of the 2026 regulatory update. Let's talk about the grace period trap and the new short-term thresholds. In the past, there was a lag. You might get a bonus in June, and Centrelink might not catch up until tax time in October. That gap gave you a false sense of security. But with the full rollout of single-touch payroll Phase 3 and the new sharing economy reporting laws, that threshold has vanished. The data decay mechanism is gone. Now, when an Uber driver gets paid, or an Airbnb host receives a booking fee, that data hits the ATO servers within 48 to 72 hours. It is then cross-matched with your Centrelink customer reference number, CRN, automatically. If you are receiving job seeker, parenting payment, or the age pension, and you think you have a few weeks to sort out the paperwork, you are wrong. The system triggers an automatic review of entitlement the moment the discrepancy exceeds a specific dollar value, currently set at roughly $100 per fortnight. Once that threshold is crossed, your payments aren't just reduced, they can be suspended pending an investigation. Now, we need to discuss the historical tenure principle, or what I call the cumulative math of debt. This is where it gets heavy. The system doesn't just look at today, it looks at your history to determine the proportionality of your penalty. Let's say you have been underreporting your partner's income by just $40 a fortnight. It seems insignificant, right? It is 2 cups of coffee and a sandwich. But the 2026 algorithm applies a retrospective calculation. If this has been happening for 3 years, that is not just a $3,000 debt. The system applies interest and potentially a recklessness penalty of up to 25%. Furthermore, the system analyzes your history of compliance. If you have a tenure of accurate reporting, the algorithm might flag this as an honest mistake. But if your history shows a pattern of inconsistent reporting, the system upgrades your case from administrative error to fraud investigation. This isn't about scaring you, it is about explaining that your current benefits are calculated based on your historical honesty. A small leak today over time becomes a devastating flood. This brings us to the intent-based status determination. You might think, I am just a casual worker, or I am just helping out a friend. But the government defines your status based on your digital behavior, not your verbal explanation. In 2026, the AI models are looking for lifestyle inconsistency. For example, if you declare zero income but your bank data shows regular transfers to a crypto exchange or frequent large purchases at luxury retailers, the system infers an undisclosed income source. They are looking for the intent to conceal. This is particularly relevant for the 3 key leak points we identified: the gig economy, overseas assets, and partner income. If you classify your Airbnb income as helping a friend stay over, but the platform reports it as commercial lodging, the system judges you on the commercial reality. Your intent is judged by your data trail, and arguing against an algorithm that has thousands of data points on you is an uphill battle you are unlikely to win. Let's zoom in on the most dangerous blind spot: cross-border surveillance. Many of my viewers in the Chinese community believe that assets in Shanghai, interest from a bank in Hong Kong, or a pension from the UK are invisible to Centrelink because of physical distance. Let me be crystal clear: the Common Reporting Standard (CRS) has evolved. In 2026, international data exchange is automated. The ATO receives bulk data packages from over 100 jurisdictions. If you have an account with the Bank of China or HSBC overseas that is linked to your identity, that balance and the interest earned is visible to Services Australia. It is not about if they check, it is an automated script that runs continuously. If you are on the age pension, your assets worldwide are subject to the assets test. Hiding a property overseas isn't a loophole, it is now a flagged risk event. The penalty for cross-border fraud is severe, often involving the total repayment of all benefits received during the period of concealment, plus potential criminal charges. We must also address the operational logistics of how money flows and where the risks lie. It is not just about the money you receive, it is about the timing. Let's look at the partner's temporary bonuses scenario. This is a classic trap. Your spouse gets a Christmas bonus or a performance incentive. You don't see that money, it goes to their account, maybe to pay off a mortgage chunk. You don't report it because it is one-off. However, the single-touch payroll system reports that gross amount immediately. Your Centrelink payment is means tested on combined family income. When that spike hits the system, your payment should logically drop for that fortnight. If it doesn't, because you didn't update the estimate, you are instantly accruing a debt. The economic risk here is the fluctuation trap. The system struggles with irregular income unless you are hyper-vigilant. You need to understand that the logistics of the government's data intake are now faster than your household budget discussions. What happens if you get caught? This is the reverse process latency warning. Many people think, oh, if they catch me, I'll just pay it back and everything goes back to normal. It does not work like that. The process of reversing a suspension or correcting a compliance flag is agonizingly slow. In 2026, while the detection is automated AI, the dispute resolution is still human and incredibly backlogged. If your payments are cut off because of a data mismatch, it can take 6 to 8 weeks to have them reinstated while you provide proof of innocence. Can you survive 2 months without your pension or job seeker payment? This latency, the delay between fixing the error and getting your money back, is the real punishment. You lose your cash flow, and the stress can be overwhelming. The system is designed to prioritize the protection of public funds over the continuity of your personal cash flow when a discrepancy is found. Furthermore, we have to talk about the collateral erosion of ancillary benefits. This is the hidden cost no one talks about. If your income is reassessed and you are retroactively found to be over the limit, you don't just lose the cash payment. You lose the healthcare card, you lose the energy supplement, you lose the cheaper medicines on the PBS. You might even lose your eligibility for rental assistance. These are the invisible supports that hold your budget together. Suddenly, your doctor's visit costs $80 instead of $0. Your prescriptions double in price. When you calculate the cost of non-compliance, you must add up all these side benefits. Losing your concession card status can actually cost you more per year than the Centrelink debt itself. It is a domino effect that destroys your financial stability. So, how do we survive this? We need continuous compliance and vitality verification. You cannot treat Centrelink as a set and forget system anymore. You have an obligation to actively communicate. This brings me to the solution. The government isn't trying to starve you, they are trying to automate efficiency. You need to align with that efficiency. This means checking your MyGov inbox weekly, not monthly. It means using the income bank feature correctly if you are a student or pensioner, allowing you to smooth out income spikes. It means having the difficult conversation with your partner about exactly what is on their payslip every fortnight. You must verify your own financial vitality before the government verifies it for you. If you wait for them to ask, it is already too late. Here is your defensive action plan for 2026. Step 1. Log into MyGov and ensure your asset details, including cars, shares, and foreign accounts, match reality. If the value has changed, update it now, before the data match does. Step 2. Utilize the single-touch payroll data that is visible to you. Look at what your employer is reporting to the ATO. That is exactly what Centrelink sees. Match your report to that number, down to the cent. Step 3. Be honest. It sounds cliché, but in an age of total surveillance, honesty is the only strategy that guarantees sleep at night. Your credit score, your reputation, and your peace of mind depend on it. Please protect your credibility. If you found this deep dive helpful, share it with a friend who might be sleepwalking into a debt trap. Subscribe to Centrelink Insider for more updates that protect your wallet. Stay safe, stay compliant, and I'll see you in the next video.